Futures are positive as it seems Spain is ready to ask for aid. Q4 had a choppy start, but banks are strengthening. Can Apple find some sure footing? I'm Brittany Umar, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with theStreet, and together we bring you Morning Call. So it's a tricky environment in the markets right now. Futures are taking us right about to the point where we failed yesterday afternoon. So Scott, what do you make of the action we're seeing?
Very choppy and tricky because yesterday we gapped up, and then by the time traders felt comfortable, including myself, repositioning because we weren't sure exactly how we would start the fourth quarter, all of a sudden, late afternoon, the market pulled in and we closed well off our highs. So if you did buy positions after 11, 12 o'clock, you probably were underwater. And then because we actually somewhat failed in the end of the day, which we call a push-through failure, a small little negative, flag, so to speak, some guys probably went out short. So they're coming in today, guys like me who got stopped out of my active tactical longs, don't own them in their higher, and guys that actually went out short are like, oh my goodness, what do I do? We're back up 7, 8 handles. Do we do a gap and go, or does it fade? So very tricky on the intermediate term, but macro charts look great, 3% off the highs. I don't think there's much to worry about here.
So what are the levels you're watching in the S&P right now?
Well, if you want to go over on a multi-time frame basis, let's take a quick look at the chart of the S&P, because if you look at the chart of the S&P, you can see that multiple patterns. This was October 4th, not even a year ago. A year ago, we were around 1,100 on the S&P. Here we go, I think, let's say October 2nd, we're at 1,444. That's a heck of a move for guys that have been investing in the market with a lot of different stocks, making historic highs. So now you fast forward to where we are right here. On a short-term basis, this is the June 4th low. You have two trends here. One trend that comes into play at around 1413, which also is right at the 50-day, which would be healthy if we came into. And then a more accelerated trend, a trend that I like to follow that I feel is in a little bit jeopardy, and that's why I'm being a bit more tactical. So if you look here at this trend line on a short-term basis, remember I talked about this level yesterday, we pushed through 1450, squeezed some shorts, and couldn't hold. It wasn't quite so drastic, so it wasn't so extreme. That's why I did not go home short. I just went home pretty flat. And then now the question is, can we get back above 1450, go sideways, and then resolve to the upside, or do we fade again today and then break this accelerated trend line and get a move back down to 1413, which I think would still be very healthy considering it follows all the higher end retracement rules that we've been talking about, in the recaps.
Now, what headlines would you attribute the futures being up to this morning?
Well, I still think that there's new money being put to work. And then also the headline that Spain is ready to, quote unquote, ask for aid, because that's what a lot of people in the market have been talking about. When is Spain going to ask for aid? Because the ECB jawboning got their yields down, but they still haven't asked. They still don't have the conditionality, which is something important for the framework moving forward. And then we also have to think about when will Italy come in, because they might have to come in also. And then also back and forth, you have this Greece renegotiation about their payment structure. But I think Spain is what the headlines are obsessing about, and they think by the weekend they might actually ask. So that's why I think we're getting a little lift in the futures, plus new flows coming into the money managers for a new quarter.
Well, let's check the temperature of some sectors heading into Q4. The Qs let us lower yesterday, gave back the 8 and 21-day moving averages. So, Scott, first, how much is tech a concern to you right now? And with the Qs, where's next support?
For traders, we love it when technology leads because those stocks move fast and move furious. So for traders, you can get immediate gratification pretty quick. So whenever you see tech lag a little bit, which it has lagged, whenever they give back the momentum EMAs or SMAs, whichever one you follow, I follow the 8 and 21 day, then you get a little concerned. But really for macro positioners, typically they're not worried until you break the 100-day or the 200-day, so we're not even near the 50. So with that said, let's go to the chart, and you can see here, we do have the makings of somewhat of a small head and shoulders pattern, where here's the left shoulder, here's the head, here's the right shoulder. Plus, you had a pretty potent break of this upper end here. And right now we haven't been able to rally, to take back more than half. So short term, bit concerning. If the Qs can get above 69.33, I think that would be helpful. Get it out of the pressure zone. But if we can't get out of this little, bear flag type pattern or head and shoulders top type pattern, this neckline or support line is invulnerable breaking. So right here you have, 68 40-ish. If this were to break, figure you say 70 to 68-ish is the neckline. Typically that's your measured move, and that takes you through the 50-day, all the way down to this prior breakout here at 66. And all in all, not such a big down move compared to where we were here or compared to where we were back last year ago. But on a short-term basis, it's just your entries and exit matter, and it's what you can hold into. So right now, this is the support that most guys are trading against, and a lot of people are probably watching Apple to figure out, how that goes.
Now, the IWM also led us lower yesterday. It did look like it wanted to hold above Friday's low. So is this the support level we should trust, or is there another one you're watching?
Well, we're going to watch this one, and then we're going to look at lower ones. And this also, the Russell is where the growth is. So if you have technology, which is considered growth, and Russell, which is considered growth, which, by the way, our economy doesn't have that much growth. We're lucky to be moving along in a snail pace. But when these things are a little relatively weaker, that's what gets me a little bit, not say concerned, but just a little bit more conservative. It's been a hell of a year, and I'm trying to be a little bit protective, so I think I could be a bit more perfect. So if you look here at the Russell, you will see, here is this accelerated trend line here that got resolved on this day to the downside. This one, a lot of guys, trying to follow this move for what could have been momentum to the upside, probably got stopped out. Now we're hovering below this level. So the fact of the matter is, can we get continuation to the 50-day? At this particular point, if that's going to happen, it's going to have to get through this level first. This level right here is around 83.30. We break below this, there's no reason why we can't hit the 50-day. So at this particular point, it does seem like the short-term pressure is on, but overall, again, a correction to here to reset the power for an upside move, I don't think is troubling. I think it's more constructive. That's actually if we get there, because it's not definite that they're going to break that level, but there are some signs.
Well, and home builders also sending out some faulty signals yesterday, as it looked like it wanted to extend higher, but ended up slipping 0.5%. So what do you make of that action?
Entries and exits matter. We talked about January being a buyer of the home builders, and in February, multi times over the course of the year. And then I think it was a week ago, Lennar came out with good numbers. I was here with Jill. It opened up. They sold it. That gave some fast money guys a little clues to, that it's priced in, that we could see lower prices. And now if you look at the XHB, you'll see that, from a move that we've had since August, following this accelerated trend line, it broke. It broke the 8-day. So if you were riding the 8-day moving average, holding positions this entire time, here is where you got stopped out. And now it's wedging right below it. So the question is, do you see continuation to this pattern to the downside, or is this going to serve as support? So this is the same question we're asking in a lot of different sectors. But again, home builders typically has been a leading indicator. So if this starts to break this way, we'll know there's more downside in the markets. But if it starts to regroup and come back to the upside of this little wedge type formation, we'll know that it just needs time to consolidate in this upper new channel, so to speak, after a very big move on this level. And if you even go further back, you'll see how much these home builders have come since, almost a year ago. Look at this move. So right here is not that big of a deal if you're a macro investor.
And financials were strong yesterday. The XLF was strong heading into this session, did see some selling pressure, but managed to close the day up nearly 0.5%. So do you think that sets a positive tone for the banks going forward this week?
I think the Barron's article helped over the weekend, talking about, I think, a 25% move in Goldman Sachs. And they actually timed it pretty well because, Goldman Sachs, if you remember, was a leader of the financials. It went, I think, September 6th. It went from like 106 to 121. That's when September 14th, the market got a little toppy. We were really overbought, and it helped lead us lower. So at this like 116 area, an upgrade helps. So if you look at the chart here, let me just go actually to Goldman Sachs first. You'll see that here's where it broke out from. Here is your doji top. This was your cute short. Nice controlled pullback into this area. So, the upgrade wound up not really sticking, but I think as long as it stays above 115-ish, I think that would be constructive for Goldman Sachs, and that would also help give you leadership clues for the banks.
Okay, we're going to take a quick break, then we'll be right back to discuss high beta tech, so stay with us.
Hi. I'm Scott Redler, Chief Strategic Officer for T3Live, and I would like to invite you to join us on October 6th and 7th in New York City for our first annual T3Live Active Trader Super Conference. The two-day event will focus on what we believe to be the 5 keys to being a successful trader. We will teach you the strategies, tactics, and mindset we take to the market every single day, and you will leave the Super Conference with a personal, step-by-step success blueprint. Visit T3Live.com and click on the education tab on the top of the page and watch preview videos of this event. Seats will fill up quickly, so be sure to reserve yours today. My colleagues and I look forward to meeting you. Have a great day.
High beta tech was a mixed bag yesterday. Apple continued lower after Friday's sell-off. The stock finished down over 1%. How concerned are you about Apple right now, and where do you think it's headed?
Well, it depends who you are. As a macro investor, you've probably held this for a few years and you're up a few thousand% or a few 100%. As an intermediate trader, I tried to follow the trends, and if you remember after last quarter's earnings, and I filled that gap real quickly, I pretty much I rode this stock for multiple days because the trend was up. There was commitment to every move, and then finally, once it got above 700, they always play with the milestones, and then all of a sudden you put a milestone on top of what was perceived as supply constraints and a lackluster iPhone 5 sales results, and since then it's been pretty pressured. If you look at the chart here of Apple, you will see that this is after the quarter, the last quarter earnings. We gapped down quickly, on sale. People snatched it up. This is when it went sideways, showing commitment. And we talk about commitment to moves. That's why it was exciting here that it showed commitment. This is when we got in our swing trade, and then it was a really nice move all the way up to the 700 area. So here you had a little bit of a push through failure. Then this is when they reported the results, and we started talking about short term. If we break the 21 day, it could be in trouble. At that point, it was like 681. And it broke it. My stop was 683, and since then it's been a two-way trade with pressure on it to close yesterday, right here below this support at, I think it closed right around 659 underneath this trend line, giving us some clues or to think that we could test the 50-day or the prior breakout. So today it's up a few dollars. It's up like $3 pre-market. If it could get back above, just say this, 661 and try and get away from here. Some are saying you're seeing a right shoulder build, which could be a bearish macro overall short-term pattern. But if it can get back up and then hold above it, and then we start seeing some more news potentially. They're talking about the iPad, the iPad mini coming out in mid-October. So if they're coming out with the iPod mini in October, it tends to have me think that maybe some of their supply constraints and something you could probably then go to an Apple store and buy an iPhone. I tried to get an iPhone last week, so did my wife. They still don't have them. So why would they roll out another product if they're not ready to fulfill orders for this current product? So maybe that will be helpful. Either way, macro investor, we've been saying tread lightly, tier one as a trader. It's been more of a short and a long based on the chart. So we need to see what happens today. If it doesn't hold this gap open, you go back to the chart, and if it starts pushing through yesterday's low, yesterday's low is 650, 650. You have the 50-day right here of 651, which should be some type of support, and then 644. But again, if it gaps up and holds the gap in the first 30 minutes, chances are, it can come back right into this range. So right now, just trade it both ways and watch the commitment to it.
And then there's Google, which remains the star stock in high beta tech, finished up nearly 1% yesterday. All these headlines saying Google could be closing in on the market cap of Microsoft. What are your thoughts on Google right now?
I think there are times to buy it and times to be light also. And this one we talked about since last quarter. This was my high beta stock play of the year. When it was trading in the 600s, I said it should take out 747, get into the 800s. And now it seems like everyone's upgrading the price targets. So when that happens, I get a little bit, just a little bit more conservative because that's when typically you get some toppy type action. Well, anyway, you look at the chart here, look at this move. Ever since it reported earning and broke this little downtrend, here is your entry, 625. Here is another entry as it took out the highs of the year. When stocks take out the highs of the year, they typically go higher. And look how it's been following the 8-day. Wow, lots of pent-up momentum. Yesterday, it did try and trade above real quickly this pivot here of 764.89, went as high as 765. I just think you need to be light up here. It's a little vulnerable for some kind of pull-in. Most other high beta names have broken their 8 days and tested their 21 days. So at this point, if you're not in Google and you want to start a new position, think twice. If you've been riding this move all the way from the lower levels in a tier 2, sell some. But I think if you are in it for the longer term, stay with it. I do think we could see 800 plus this year.
And BIDU was hit yesterday after its rating was cut by Jefferies. What are the levels to watch here?
See, this stock's a different story. It's been broken, but it's been trying to regroup. And I know last week it started to act a little bit better, and it closed actually strong on Friday. And sometimes you get a little blindsided. And I know guys probably said, look, BIDU's probably back. It's trading a little bit stronger. Google's at historic highs. closing on the highs. Good book says take it home long. And then yesterday got downgraded by Jefferies. It's downgraded again this morning. So if you take a look at it, it's just very frustrating. Here's where it broke above this mini trend line. But again, this is a lower level laggard trade, so you never take too much size there. It's not a leader. But it looked a little bit better for cash flow. And then it gapped down yesterday, never thought about filling it. It's down a little bit today. I just think it's an avoid. I don't know why everyone keeps downgrading it. Maybe they're going to have a bad earnings quarter, but the CEO actually yesterday was speaking highly about it. So at this point, just keep it light and keep it day to day and try not to have too much risk here because, again, this stock has been broken. It's been trending lower, high, lower high. This could be another lower high. And just watch this bigger support here around 110.
And Amazon finished the day in the red yesterday with a small loss of almost 1%. It is trading around the key moving averages, so we're seeing some choppy action with this one too. What are the levels you're watching here?
This one I haven't been trading as much. It's been very lethargic and a lot choppier. It gave you a nice entry after earnings also. It's given you like 2 entries, and since then it's been methodically following the 8 and 21 day, but now it's kind of giving it up. So if Apple could do it and some of these others could do it, why not Amazon? So if you look here, I would just be in a little protective mode. Here's when it broke above, what was this, 230 for earnings, and then here's where it got energized again through the highs, and then it followed the 8 day all the way up until finally this potent day. If you look closely, you'll see this was a day to take notice if you were trying to trail it. When it closed on the lows, engulfed this upper range, and since then moved lower, tried to bounce the first time and it didn't. You do have somewhat of a downtrend here that, if it were to start getting back above, just say 256, I would think that it would get out of some of this pressure zone. But watch this support right here. If it can't hold this 250, you do have the 50-day underneath at 244. So the question with, I guess, a lot of these are, we've been spoiled. They've been following their 8-day, their 21-day. And then once that changes, you have to lighten up, have high-level stops, and then see if they hold their 50-day, which could be a good opportunity to buy if you sold the strength and you sold when they broke the higher up moving averages.
Now, what about Facebook, which added on to its gains yesterday after Friday's big gain? So it has reclaimed all its key moving averages. What's your strategy here?
Facebook, we were trying to put together a swing trade with this. It was acting really well from the lows. And then Barron's, which I guess it could be your friend or foe, came out last weekend and said $15. So that got a lot of us out of our stock because it came right in. But on a macro level, you look at the chart, it is a laggard play, but it has been acting better. Okay, so this was the move off the lows. This is when it broke this small little downtrend here, right around 1945. That's when I think a lot of us got a nice meaty long on right here. Then you had your gap up, and then it came right up into resistance, which it looked like it was hovering. And then you had the Barron's article, came in, retested this gap area, but you know what happened? It did not fill it. It did not fall apart. And then started to trade better, announced their little gift service. And now I'd say the longer it holds above these moving averages, the longer it stays above 21.5, I think the higher the probability there'll be another nice trade through this level here. And this level right now is about 23.30. And then you have this really big gap from the last time it reported earnings. So I do think traders will be watching it. Stocks that get into their gaps move fast, so that would be exciting. So above 21.5, I think guys are going to keep watching it. And then above this 23.30, you can get some momentum into that gap.
All right, let's pick up the speed here, do some quick hits. Let's first touch on Goldman Sachs, which you mentioned before. It's now facing a huge gap from its gains over the weekend. So how are you positioning yourself now?
As long as it stays above 116, stay long.
All right, and GLD hung on to gains yesterday, now rising above the 8-day moving average. So how do you treat gold now?
This is actually at some big resistance. It pushed through quickly yesterday with silver and then failed. I still think it's okay. The better entry obviously was August 20th, 21st. Now I think you stay with this as long as it stays above you. If you take a look at the chart here, as long as it stays above the 8-day, which is 171. Overall, take a quick look here. Big resistance coming in, so it definitely should relax here and digest here, but still above the 8 and 21, so still looks good. But in order to get some momentum, it's got to stay above 172.5 and continue. But for right now, hopefully it holds above this 169 area.
And Las Vegas Sands continued to get some selling pressure yesterday. Does it need some time, keeping it on your radar?
I think most traders are looking for momentum above 47.40. If you're not going to sit in it and just hang out and treat it as a longer-term position, wait till 47.40. If the market's strong, that level should get taken out with win at about 116.5.
And we also touched on IBM, but really quickly, it did set a new high yesterday, cleared some resistance. At what level might you get involved?
If you're not involved, just let it go. If you're riding it, sell some, trim it and trail it is what we say on the Twitter feed. Nice flag type pattern. If you look here, your entry should have been, right as it cleared this area. First of all, you had a few entries here. Once it cleared this resistance, I think we had it on off the charts right there. Then it flagged. Here was your last buy price when it cleared 207, and now at new highs, you never want to initiate. You always want to trim and trail. But overall, this is showing some of the health of the market. That a mega cap like IBM, if you pick this stock, rode it for the last decade, you look at the monthly chart here, you've made a lot of money in a very liquid mega cap name versus an Intel that has done nothing. So you need to be a good stock picker in order to make money, not just throw a dart at the wall.
All right, so where's your focus heading into trading today?
Yesterday the market faded. And a lot of people lost money trying to be long. And today some people went out short. Today people are going to probably have short in the brain and say, okay, I'm just going to fade the market because that's what worked yesterday, and they're probably a little upset at the market on a short-term basis. So I'm going to see what happens in the first hour. A lot of sellers are going to come in. If they can't sell it down in the first hour, typically you go in the same direction. So I might try again to reposition for a move higher, or I'm probably going to just stay tactical. It's been a really good year. I'm just off the highs of my year, and I'm going to probably watch Apple also to see if it can hold this little gap open. I think there's opportunity. It's 45 points off the highs. I would have liked to seen it down open into the 50-day. I would have made it a cleaner move, but a lot of traders aren't getting the setup they want, so they have to adjust. So I'm just going to adjust, and if it doesn't come to me, I'll do a little less.
Well, that's your morning call for this Tuesday. Happy trading, everyone. Have a great day.